Okay.
Excellent. Good morning, everyone. Thank you for joining us for session 71 of ASKSBDC and our work with CaseForce. We're here to bring you information and updates on the disaster relief loans for COVID, EIDL Fire, and the California Rebuild Fund. And we also have Mark Dillman from United Policyholders here to answer legal questions for all of you who are on the line. Again, this is session 71, and it's hard to believe we're already in December. So I'm joined today by Sunita Maharaj, who is always on here with me. She's our Associate Director. And then also in the Finance Center, we have Scott Rogalski. With Northern California SBDC, we are supported by the Small Business Administration and the state of California, providing no fee advising for small businesses. And so for today's agenda, we'll have a disclaimer. We're going to give parameters for the COVID and fire emergency economic injury disaster loan parameters. We'll be covering the PPP applications and required loan documents for forgiveness. We'll be giving an update on the California Rebuilding Fund. We have folks here from the SBA who will be giving us updates. We'll be covering upcoming webinars, and then we'll be going to questions and answers with our Case Attorney Coalition. So our disclaimer, this information was correct when the presentation was created and updated this morning. Currently, you can still apply, and please don't hesitate to apply for the economic injury disaster loan if you haven't done so already. They're accepting those applications currently. However, the economic injury disaster loan advance is no longer available as those funds have been exhausted. As well, the PPP loan is no longer available, which closed in August 8th of this year. So covering the parameters for the loans that are currently available, we have SBA has two loans that are available under the Economic Injury Disaster Loan Program. One is for COVID, which has been available since March. And then more recently, there's one that's been available for businesses in counties that were affected by the fires this summer. So under the COVID-related loan parameters, for businesses that are for-profit businesses, those loans are offered at a 3 3/4% interest rate. For nonprofits, a 2 3/4% interest rate. And those are for a term of 30 years. And the first payment is deferred for 11 months. So you won't have a payment due until after the 11th month. However, interest does accrue during that time. There are collateral requirements and personal guarantees. The collateral is required for any loans over $25,000, and there are personal guarantees required on loans of over $200,000. These loans, unlike the PPP, are not forgivable, and they have a more broad applicable use, though. They can be used for all operating expenses, cost of goods sold, and interest debt payments related to business debt. They are not, however, allowed to be used for anything that would expand your business, like acquiring or growing your business. You cannot pay off full amount of loans, the principal related to that, and you're not able to use it for tax liens. For the fire-related loans, those interest rates are 3 to 6%, depending on your business's particular circumstances, or 2 3/4% for nonprofits. These are also available for up to 30 years. And unlike the COVID-related, these are deferred for 6 months. There is collateral required on these loans for loans of $24,000 or more, and personal guarantees from all owners who have a stake of 20% or more in the business. Likewise, these loans are not forgivable, and they are able to be used for working capital to cover all ordinary business and operating expenses. And also, like the others, these aren't able to be used for expansion, paying off amount of loans, tax liens, or you cannot use them to refinance other loans that are at higher interest rates. So with the PPP, we've been getting a lot of questions related to forgiveness because most businesses have gone through their covered periods and spent down the money. So the timeline is you have up to 10 months from the end of your covered period to submit paperwork for forgiveness. Now your covered period would be up to 24 weeks. It's 8 or 24 weeks from the date you were funded on your loan. Now, from the time you submit your forgiveness paperwork, the lender has 60 days to process that paperwork, or if they're doing it using an online portal, as I know some of the banks have been creating, from the time that they take in that information, they've got 60 days to process it on their end and forward it to the Small Business Administration. And from the point that SBA receives it, they have 90 days to make the final determination on forgiveness. So repayment deadline for unforgiven funds, this is a 1% interest rate accrues from the date it was funded, and any portion denied is immediately payable for interest and principal over a 5-year period. So up to 5 years to pay that loan off. Now, your rules for forgiveness are you have to have used the funds appropriately. Payroll expense would be a minimum of 60% of your total PPP loan. So if you got $10,000, for instance, you would have had to use at least $6,000 for payroll and related expenses. During your covered period, you could not have reduced your wages by more than 25%, nor their hours by more than 25%. And you have to have maintained your average full-time equivalent employees, unless your loan amount was under $50,000, in which case you're able to use the simplified forgiveness form. And there are safe harbor and other exemptions that may apply. And Sunita, would you like to take this part here?
Sure, I can do that. Good morning, everyone. Thank you so much for joining us. I do want to go into some questions already since they've been hanging on here for a little while. In regards to PPP and what we're going over now, we possibly will answer these questions during this, but I wanted to throw out there, this is questions that we keep getting asked, and we're happy to go over it as many times as we need because it is, it's confusing. So how to apply for PPP forgiveness? It depends on who you receive the money from. So say if it was from B of A or if it was from a local bank, you know, maybe California Bank and Trust. Most of the lenders have an online portal, and that's where you will apply for forgiveness. A lot of the lenders are also sending out emails to you, not necessarily meaning that that all of them do. Some are not accepting applications yet. They are still waiting on legislation to possibly forgive a certain amount of the monies. What that is, we don't know. And that another question, so that answered 3 questions right there. Another question is do we know when that's going to happen? Of course, this morning I heard that they're hoping to have something pushed through before December 11th, but honestly, they've been saying that for the last several months. So if that's going to come up, I don't know. We are all hoping, of course, as much as you are, that this will come through sooner than later. We are also going to touch upon something that came upon through the state of California, which we will do when we go through the California Rebuild Fund. So we'll touch upon some of that as well during this presentation or during this webinar. So for the PPP loan eligible costs and auditing, so you can use it for payroll, and these are some of the areas in payroll that you can use it for. So you can also use it for cash payments. Say you had to pay somebody cash in regards to paying them, that's your normal way of paying them. You can still use that money. Just get a receipt from them, get something to evidence that you paid them cash. State and local taxes you can pay. You cannot pay your federal taxes with it, but you can certainly pay your state and local taxes. Your retirement for your employee, you can also use that money to pay that. Medical insurance premiums, business rent, as long as you had rent in effect prior to February 15th, 2020. If it happens to change during the course of the year, that's fine too. You could still use that money, just as long as the caveat is you had a lease in effect prior to February 15th, 2020. Business mortgage interest, same thing there. Mortgages in effect prior to February 15th, 2020. Utility payments, same dates there. Utilities in place prior to February 15th, 2020. Doesn't have to be at the same address. It just has to have been in effect prior to February 15th, 2020. Auditing, any business can be elected to get audited. If you receive 2 million or more, most likely you will be audited. So we just want to make sure that everybody knows, even if there are different ways to apply for forgiveness, because there are 3 different applications, it doesn't matter which one it is, you may still be able to get audited. And we ask that you keep all of your documents. I would keep everything in a safe place for, I don't know, 5 to 7 years, but I'm more cautious that way. So, I mean, you do what's best for your business, but you never know when somebody is going to ask you for these documents. So I would keep it as long as you do your tax returns. Next, please. Thank you. So these are the different applications that you can use. So if you received a loan of, or a PPP loan of 50,000 or less, you can use the simplified loan application. It's very easy. It is 1 page. You just sign off, you answer a few questions, and then it is it's signed off. And then you send it to your lender, or it's an online application through your lender's portal. Most of them, that's how they're doing it. All of them, I don't know yet, but the majority of the lenders that we have worked with or that clients have told us, that is how they're receiving it. It is an online portal through their website. These are for $50,000 and less. It doesn't matter if you're self-employed. It doesn't matter if you didn't have any employees. That doesn't matter. What does matter is that you received $50,000 or less. If you receive $50,000 and $50, you would not be able to use that application, unfortunately. So let's go with the 3508 EZ form. Now that EZ form, here are some caveats. $50,000 or more, you can't have been self-employed with no employees, or no more than 25% reduction in wages, no reduction in employees, and no more than 25% reduction in wages. You are not able to operate due to compliance with the health ordinances in the area. And I know it's getting stricter and stricter each and every day. So we can look at that with you. If you're unsure, just call us up at 833-ASK-SBDC and we can walk you through that. And then any business can use the 3508 long form. It is quite a long form. If you're able to use the EZ or the simplified, I would suggest doing that instead. But if you have to use the 3508, we can walk you through that. You should complete the Schedule A first. That way it'll make it easier for you to complete the rest of the forms. Next, please. Required documents for your PPP. This is things that you should keep on your desktop. You should put it in a folder. You should put it somewhere safe, so that way you are not having to worry about this as well. So your payroll and related cost documents, whatever it is that you're using. I know somebody in the Q&A stated that they don't have a 641 or they don't have this. So how is it? Do you have an Excel sheet? Is that how you're keeping track of what you're doing? How do you normally send this information to the state or whomever asks you for this information? Those are the documents that you're going to use. Most people are using that one form, but it doesn't mean that that's necessarily the only form that they will take a look at. The other thing is ask your lender. Talk to your lender and find out what other clients are using or what is appropriate for them, since the lender is the one that is going to review your documents and your application and then submit it to the SBA. Keep all of your utility statements, rent statements, mortgage and interest statements, and all of the applications can be found at this link here. Just go to sba.gov, funding program /loans. I know this is quite a long tag here, but this is exactly where you will find all of the applications. If you also need to look somewhere else, the Treasury Department has all of the applications on there as well. There's a ton of information on these websites though. So if you need us to send you a direct link to the particular application you need, please give us a call at 833-ASK-SBDC and we can send that out to you. Alan is also putting this information in the chat. We have other documents that are going to be uploaded into the chat. There is a great SBA document that just came out last week, and it's a new FAQ. It is very user-friendly. It's great to look at. It's very visually appealing. It's not difficult to read. I just read through it last night. It has great information in regards to PPP. It has great information in regards to, in regards to EIDL. How do you reapply for EIDL? Say you received $50,000 for EIDL and now you need more money. It's showing you exactly the steps on how to do that. I know there was a question in the Q&A on exactly how to do that, and that document shows you. We can also walk you through it, but this is a great document to look at for everybody. I know we have advisors on this webinar, and it's a great resource for you as well to keep in there. And our team, we've put it in Slack, so you have access to it there as well. Next, please. I'm not quite sure what the next one is. The California Rebuild Fund. Mike, I'll let you take this one over.
Sure, thank you.
Awesome.
Yeah, so a week ago, this last Friday, the California Rebuilding Fund launched, and they're ready to accept pre-qual applications. They're actually accepting the full applications now. And that's at caloanfund.org. So the way that this works, this is being offered to businesses with 50 or fewer employees and 2.5 million or less in revenue. And the loans are for up to $100,000. So what will basically happen is you go online and you put your information into the portal, and it will match you up with a lender. These are done with different nonprofit lenders around the state. This is a California-specific fund. And these are being distributed through 12 participating community development financial institutions. The loan amount will be equal to revenue for 3 months, capped at $100,000. And unlike when we look at the EIDL loans, those were by contrast to cover 6 months of working capital. These are capped at 3 months and a total of $100,000. And the terms are 4.25% for 5 years, for up to 5 years. It's 3 to 5 years. And the first year is interest only. And then after the first year, it will be amortized over 3 or 4 years. And so that makes the first year is going to be a little easier for, while you're recovering and the economy is recovering, to handle the payments. Now, these are full doc underwriting. They will need year-to-date financials, a 2020 monthly profit and loss statement, your 2019 tax return, articles of incorporation, and a credit write-up explaining the impacts of COVID on your business. So now we've got our SBA support folks here. We're going to go over any updates we have. Who do we have today?
Hey, thank you, Mike. This is David Castaneda, Economic Development Specialist. I'm out of the Sacramento District Office of the SBA. Yeah, very good information, everybody, on the updates here. Yeah, there are a little bit of updates from the SBA. So just recently, under the Freedom of Information Act, there has been a huge data release. And again, this is because it's government funded programs, but information on businesses that received the economic relief aid from the SBA. So that could be found either at sba.gov, and you do have to go to the Freedom of Information Act web page on our site, and you can find it there. From what I understand, there's like 10 million businesses, that are listed there. They also do list the lenders that have, participated in this program. So there's a lot of data. I'm not sure, how in depth they give information, but again, this is all according to the Freedom of Information Act policies. You also can reach that information through the treasury.gov website. And again, that's just information about businesses that received these loans and also the lenders that participated in the program. The other thing to keep on your radar is identity theft. Again, the SBA is dealing with a lot of individuals, innocent people that don't even, have businesses, but their identity has been used to apply for one of these loans through the SBA, whether it's Paycheck Protection or the EIDL. So we, the SBA, are trying to get a handle on this. So if we hear of anybody that calls us, we do submit their information internal to SBA to a database so we can track that. But just like any other identity theft an individual has happened to them, there are certain things they do want you to do. For example, they do want you to
we appear to have lost David's sound. Or was that just me?
No, we lost him.
Lost him.
Okay. Well, let's give him a moment to get back, but if he doesn't, I think we might have to move on and wait for him to return. Okay. Why don't we move on?
Yes, I would go ahead, before we move on, maybe we could take this chance to answer a couple of questions. There was a question from Julie asking, PP monies, are they taxable? So this is something that you're going to want to talk with your tax professional about. The intention was not for the forgiveness of that debt to be taxable. However, there have been some confusing announcements coming out in the news around that and guidance that has come out from the IRS. So because we are not able to give tax advice, I would recommend strongly that you reach out to your tax professional as soon as you can so that you can understand what implications you may face for this year being 2020 and what adjustments you might have to also be looking into for next year.
Hi, Mike, this is David. I made it back. My internet dropped me.
Oh,
welcome back.
Welcome back.
So I think I was talking about a real quick identity theft. So again, we are trying to make sure we capture people, or if people come to us and let us know that they've had identity theft, we're trying to make sure our agency is aware of it. So we're putting this information on a central database, and this is for internal information. But again, what they're stating is that each individual still needs to do their own due diligence, which means have a police report on if you did have identity theft. You do have to report this or work with the reporting agencies, the Experian, Equifax, TransUnion. From that point, when you work with those reporting agencies, then they can connect with SBA to help get that off your report. So from what I understand, that's the route you have to take to get SBA to take that off your report, okay? So that's something that we're working with that has been coming on. So the other thing too, along with the new information here, IRS did come out with some information about how to handle your taxes. And I think, Mike, you were just talking about that. But again, this is probably good information for, accountants, tax type people to first get a handle on this information. And again, individuals, business owners, it's best to work with your tax people on this because it is, quite involved. So again, the three things that I was talking about is the Freedom of Information Act, information about businesses and lenders that are participating in the program. That is now on the treasury.gov website or sba.gov website. Be careful with identity theft. If you haven't done so already, you may want to put a freeze on your credit reports, through Experian, Equifax, and TransUnion. From what I understand, it's at no cost, but at least if someone tries to tap into your credit, it will stop them there, from what I understand. Again, IRS came out with some new information on the handling of the COVID, the EIDL or the Paycheck Protection Program. But again, I do encourage working with your accountant or tax person on that. And I just want to thank the SBDC finance team for giving such great information and help to not only the consultants that are out there, but the small business owners especially that are out there that need this help. And very good information. And the individuals that are listening, I encourage you to invite other consultants or lenders that also need to hear this information, because there's still more to come that they can help you with through this process. So invite somebody to this webinar, because a lot of good information. So that's all I have for today. Thank you.
Thank you so much, David, for being here with us today and providing the updates and information. Really appreciate it. And I have a question here from Lynn. Should I just wait to hear from the lender? Sorry, but I'd like to get the forgiveness done. Lynn, I would say that the best thing to do at this point would be to reach out to your lender. It may be that you visit their homepage and they're letting you know how they're handling it, but that's really, each lender is different in how they're approaching this. And because the lender is who's going to be making those decisions and who is setting up their own logistics for forgiveness, that's where you'll have to seek that answer out first. Okay. Okay, and Alan, would you like to cover some of our upcoming online learning?
Sure, we've got a whole bunch of stuff being done at the local level. At the region side, we're doing our startup series again. So actually, that starts this afternoon. Starting your business today and tomorrow. Planning a business planning workshop is next week. We piloted that last month. That was extremely successful. So if you're and this is also obviously this is aimed at startups, but anyone who might need to rethink their own business models as we move into phase whatever it is of our pandemic, that might be worth. We will introduce you to a tool called the Lean Planning Canvas, which you could probably use to help you work through that as well. And then an introduction to financing your business, about financing funding foundations for new businesses. And that's what we're doing centrally. I said that if you look on our network calendar, there are literally in December, I think we've got about 40 or 50. I think it's calmed down a little bit in December because of the holidays. But there's about 40 or 50 different workshops being done by our centers up and down the network. From a lot of stuff to do with holiday marketing and the like, a lot of e-business related stuff on there. So have a look on that link, SBDC Events Network calendar, and you can see that. And if you missed a webinar or you think it might be a good idea to see it, have a look on our on-demand webinar library, learn.norcalsbdc.org. We've got about 14, so I think 16 maybe now, we're growing. Copies of recorded webinars where you can view those webinars, download the files that go with them, and give us your feedback on them. So please take an opportunity to use those learning options and let us know how they work out for you. Okay.
Thank you very much, Alan. All right, so for here, we're going to start our Case Force Q&A. So any of the questions that haven't been asked yet will be Sunita, myself, and Mark from United Policyholders will be here to answer your financial and legal questions related to the pandemic. These office hours are intended to be a resource for small businesses with fewer than 25 employees and nonprofits to learn information about various resources and legal issues relevant to the COVID-19 pandemic. They are not intended to offer legal advice, and the leaders of office hours are not able to represent office hour participants as their attorneys. This session is intended to address issues related to the pandemic, and panelists aren't able to comment on general non-pandemic related issues. With that today, I'd like to introduce Mark Dillman from United Policyholders, and he's going to go ahead and give us a little introduction.
Thank you very much. And again, thank you all for having me on again. It really is a pleasure to be on with everybody. So again, like I said, my name is Mark Dillman. I work at United Policyholders. We are a nonprofit 501c3 organization. Our executive director and co-founder, Amy Bach, founded UP almost 30 years ago, and with the main goal of serving as an information resource and a voice for insurance consumers in California and nationwide. So again, I'm in this very kind of this narrow field here today to talk about COVID loss recovery based on business interruption losses in the insurance realm. Something that we focus on, we focus on insurance generally, but one of our initiatives more recently, if you've been on before, you're about to hear a similar spiel here, but we focus on business interruption losses dating back to about March now. So to see and check out our COVID library, where we're kind of housing about 500 different documents, articles, resources, court orders. Go to uphelp.org/COVID, and you can check out some more resources, again, related to business interruption losses. So I want to give, again, just an overview and some considerations in regard to business interruption insurance losses. I might sound like a broken record here, but we are still uncertain as to what business interruption claims will and will not be paid. I wish I had an update from a couple months ago, but it is still uncertain. So the policyholder side is still trying to combat the insurance narrative from the beginning that there is no coverage. And again, I want to reiterate that this is not necessarily true. I don't want to proclaim that you do have coverage by any means, or that the battle is leaning towards having coverage, but it's not necessarily true that you do not have coverage. I want to reiterate, many different policies exist, different forms, and also how courts are interpreting policies for COVID related business interruption losses changes from state to state. So again, be skeptical of blanket statements by insurers and even your agents and brokers that are saying that you may or may not have coverage. And the best thing you can do right now is stay informed. It's an ongoing process. So in terms of the scorecard, I'll call it, in the courts on how courts are ruling on whether or not business interruption coverage covers COVID-19 losses, we're looking as of today, it's a rough update. We have about half of the cases that have been heard in the early stages have been fully dismissed, meaning insurer friendly, but just under half have been dismissed, but are allowed to rewrite their complaint and resubmit, and just over a quarter have been allowed to move forward. So just over a quarter of the cases nationwide have been, policyholders have been allowed to move forward with their cases involving COVID-19 business interruption losses. So the two main hurdles in getting coverage, again, are the requirement of the direct physical loss of or damage to property. And again, every policy is different, although that is this kind of standard language and involves that first major hurdle that about 98% of small business policies have in their policy, that requirement for direct physical loss or damage to property. And courts are jostling with the issue of whether or not COVID and the actual virus on the property constitutes that loss requirement to meet that initial prong. And then the second major hurdle, again, these aren't the only two, but the second major hurdle are virus exclusions. And about 83% of small business policies have the exclusion based on a report that was put out, a data call that collected information about small business policies. So again, these are still unresolved issues. So it doesn't hurt to stay in the loop. It's a changing landscape. So I just want to go through again some next steps. If you haven't already heard these steps, or perhaps you are on step 1 and want to be reminded about step 2, I want to go through 4 steps that you should be following if you are a small business in California. And basically how to find out whether you have business interruption coverage or the potential for coverage. So step 1, again, is request a full copy of your policy with endorsements. If you can request an electronic copy that provides you with a searchable PDF, all the better. Step 2, once you get that policy, search for the terms business interruption, but in small business policies, the business interruption coverage isn't always labeled business interruption. Oftentimes it is labeled business income coverage. So search not only for business interruption, but also for business income terms within, Control F if you can, or if not, look at the declaration page, look for where you might find business interruption or business income in your policy. This policy or coverage might be found within the meat of your policy, within the main document, or it might be added on the end as an endorsement. So be sure to check both. That's why it's incredibly important to request a full copy of your policy with the endorsements, because it may be included there. Again, based on the numbers that we've seen, and we're not sure how accurate, it's hard to gauge. We would say more small businesses do not carry business income coverage, but many do. So third, do the same thing. Search for a virus exclusion. Use that search function if you can, but don't only search for the term virus when searching for a virus exclusion. Search for the terms virus, also look for pathogen, and also look for contaminant, as these exclusions are often listed and worded slightly differently depending on what policy form you have. Again, multiple types of policies out there. I can't stress this enough. Even if you do find a virus exclusion in your policy, this does not necessarily mean that you do not have coverage. Again, it's varied state to state on how courts are interpreting different policies, how courts are interpreting different types of virus exclusions. In fact, I believe a decision came out just 3 days ago. It was not in California, I believe it was Nevada, and it was a pollution exclusion that included the word virus. But the court allowed the case to go forward and said that, just because it was a pollution exclusion, it did not apply to the coronavirus in the way that a virus exclusion otherwise would. Many policies do have an explicit virus exclusion that's written outside of a pollution exclusion, unlike this case. But I do, again, just want to reiterate that there are different types of exclusions, and the courts are still interpreting which ones apply and which ones do not. And that fourth and final step, after you get that policy, is no other related coverages that you may have. Look for extra expense coverages in your policy, look for civil authority coverage, and read the actual wording in your policy, and look for communicable disease extensions. Sometimes there are allotted amounts. The most notable is $50,000 specifically for a type of loss like this. So again, those 4 steps: request a full copy of your policy, search for the term business income along with business interruption, search for virus exclusions, pathogen, contaminant, and then no other related coverages. So what to do in the meantime, if you're between steps here, is put your insurer on notice. Still a requirement, whether or not you have coverage. Even if you think you do not have coverage, it doesn't hurt to put your insurer on notice, because if you don't, you could risk not being paid later on. Compile relevant information and track your damages. Just like the requirements for the PPP loans, you're collecting the same types of documents. Put them aside, look at government orders, accounting documents, business forecasts, and make sure that you have this bundled in one place, and document and diary all business decisions leading up to the closure or slowdown of your business. This is important not only for insurance monies that you may be entitled to, but also may be useful if other funding for similar losses is available from other sources through a government program or legislation that comes down. So again, happy to answer a few questions related specifically to the narrow topic of business interruption insurance losses. But another great resource, aside from what you're being provided here today, is uphelp.org/COVID. And again, I want to say thank you. Thank you again for having me on.
Thank you so much, Mark, for continuing to be here with us on these Wednesdays. I did want to, there is a question from Deepak for you. Our company got into motel business in May of this year. Company owns real estate motel. Is it possible to, oh, sorry. I thought Deepak had a question for you. Is it possible to apply for EIDL for this company? If it is a brand new company that was not in existence prior to February 15th, 2020, Deepak, unfortunately, you would not qualify for the EIDL loan. And if the PPP were to get resurrected as it stands now, you would not be able to apply for that as well. There might be some other avenues, other loan programs that you could qualify for, but we would have to look at your financials, Deepak. And if you want to give us a call at 833-ASK-SBDC, we can match you up with an advisor to help you through that process. We also have additional, sorry, we flipped through. We also have additional webinars that are coming up for our group. And the next one for CASE is going to be on the 16th. So not next Wednesday, we will not be here, but the 16th, we will be back with CASE. We'll also have any updated information for you. I know that the state of California had put out something on the 30th in regards to a $500 million grant. I'm surprised that nobody asked about that because you guys are pretty much on it. But unfortunately, there's not any more information than just that. Sometimes they put this information out without fully having it vetted out. I believe that there will be this money coming, but as of right now, we don't know what that's going to look like. But as soon as we find out, just like with everything else throughout these the several months, we will let you know right away. If you could go back maybe 2 slides, please, Mike, and then we'll also answer some questions as well when we're going through that.
So Nina, would you like me to share that link you gave me about the grants?
That
So
would be
people can
great.
see
Yes.
what we've got.
Thank you very much. Alan is going to put some information in regards to the grant in the Q&A, sorry, in the chat. There's also going to be another document in regards to the tax exemptions. It will be placed there as well. Is it the SB 1447? Is that correct, Mike?
Yeah, that was the hiring tax credit.
Yes, so that'll go there too. Case is going to hopefully find somebody to assist us on the 16th to answer some of these questions as well. So come back on the 16th so that way we can have that information for you too. So I am crossing my fingers we will be able to find somebody with that expertise to come on the 16th. So have those questions ready. So December 15th, we are having Financing Your Business. I know that Alan had already showed that, but that will be presented to you by one of our Finance Center people as well. Our lending team person, Kyle, who you have seen on these Wednesday webinars before. Then on the 16th, we will be back, Mike, myself, and Alan, and Bree, and then I'm not sure if Mark will be back that day or not, but if he is, we'll welcome him. Thursday, the 17th, owning and investing in real estate for small businesses and entrepreneurs. We're going to present that as well. And then on the 30th, we're going to take the day off. We will actually be off that week. So we look forward to seeing you back on the 16th. But we're going to go jump into the questions. Sorry for not getting, we've answered 15 so far and 5 to go. So we're going to jump into that right now.
Okay. There was a question that I mistakenly marked off, and this is from Kathleen. As he said, sorry if answered earlier, we can explore the insurance approach even if we've received funding through these other sources. So if I'm understanding correctly, Kathleen, you're wanting to explore whether you've got coverage under your business interruption. Mark, do you have any thoughts on that? Would that be impacted at all, whether they received any of the emergency loans under SBA?
So I cannot speak with certainty to that. I would assume no. I actually was going to throw that question back towards you all and see if there was any eligibility that was affected or impacted if they did receive insurance funding. So I am not sure. I don't see any reason why it would impact their insurance claim, but I'm not sure if that turns around back with the loans provided.
I don't think that if they got other proceeds in that way, the loans aren't predicated on that. The loans are simply predicated on their other eligibility, and whether PPP and EIDL can't be used for the same purpose at the same time, for instance. But other than that, it's just the business qualifications for the loan.
I believe it was EIDL. If you were able to get funding elsewhere, then at that point in time, then you would use up that funding. Like you said, Mike, you can't use it up at the same time. But then if you still were in need, then you applied for EIDL, then I don't believe it should be an issue. But if you're getting everything at the same time and using the funds at the same time, then that could be an issue.
Hopefully that was more clear than mud from us, Kathleen. Hope it was of help. Let's see. So this is a question from Mark. This is from Jill. It says, please repeat the last 3 items to look for, including extra expense.
Absolutely. So along with the business interruption, I did mention to go through and look for other coverages that may be applicable. So there's extra expense is one coverage, civil authority is another coverage. And some policies also have an add-on communicable disease extension. Now, this list is not exhaustive, but I do want to point out that a lot of those two big hurdles they may not, but they may also apply to receiving funds under these other coverages. But if you can get past those hurdles, or you have a favorably written policy, extra expense is going to put more dollars in your pocket. Civil authority and communicable disease may as well.
I have one. You're popular today. We have one from Maryland asking, so we have all received a letter from our insurance carrier that we do not have coverage. Does that mean our insurance is useless?
So that is the favorite answer, right? Is it depends. So it depends on why. So these cases that I mentioned today that are in court right now and are going through the litigation process are all insureds, or mostly insureds, I should say, that have also received a denial that are now fighting. And some of these cases are able to move forward and some are not. So I would ask, one, have you gotten your policy, and do you have business income coverage at all? If the reason that they're saying you're not covered is because you don't have business income coverage to begin with, then perhaps. But if the reason is that you have business income coverage, but they're saying an exclusion applies, I would say stay tuned in to what's going on in California in the landscape, because there's not a definitive answer. I will say that overall, quite a bit more cases have been dismissed and decided in favor of the insurers in California. But again, a lot of the better cases that we've seen and some of the best cases and policies thus far have not even been filed. So I wouldn't say absolutely no, it's not useless, but keep up to date as to what the courts are doing. And again, follow the library, and we'll have updates, especially in California, if there are some favorable outcomes.
Okay, and I have another one from Sean, and his question is, I sent my insurance documents to the California Insurance Commissioner. If something changes and they rule that biz interruption insurance should include COVID, do you think I will hear anything back from the commissioner?
Well, that's a good question. We deal quite a bit with the California Department of Insurance with the wildfire claims going on, and we know depending on their volume that it changes how quick and how receptive they're able to get back to certain complaints. I imagine they're doing the same thing that we're doing right now, and they are monitoring what's going on in the courts. Again, one decision on one policy may not apply to all policies. It may be a nice guiding post as to where these rulings are going in California. But I honestly am not sure what they will do or how they will respond. I think the best thing that you can do, again, it seems like you've sent the policy along, and you may get a response. They may point you in the right direction, but I think the best thing you can do is stay as up to date as you can, because they ultimately are not going to be making that decision.
And Sean, that would be as was posted in the chat. The web address would be Mark. What's your it's web address?
.org/COVID here. I'll throw that in the chat again. I saw it was put in earlier, and I appreciate it. I'll throw that in right now.
Mike, can I ask a really quick question, just of all the participants really quick? I know that we've been doing this for 71 or 72 sessions now, and a question for you from all of the participants is, do you want us to continue this as is our Wednesdays? And if you can put this information in chat, or would you like to see something else? And if so, what is that? I would have done a poll, but unfortunately you can't write in the poll. And we want to know what it is that you're looking for from us on our Wednesdays. It seems like a lot of people still join us every Wednesday, and it seems like information that you want and need. But we want to make sure that we're giving you everything possible that you need when you come here on Wednesdays. So if you could put that in the chat, that would be great. I really appreciate you doing that for us. Thank you.
We have another question from Kathleen. Early on, there was concern that if we received any government funding, we would moot any access to insurance coverage for losses. Kathleen, we addressed this just a few moments ago, and the answer is really, we really don't know. We really don't know how the insurance companies, as well, I don't want to put words in Mark's mouth, but really just wasn't an answer from us on that.
Can I add one thing there? And I know that
Yep.
that question is looking forward, but I'd like to, looking back, but I'd like to look forward for 1 second and just kind of hit on something that I mentioned, and that is still collect those documents, still collect, the business forecast, still collect and have handy any government orders that, may have shut your business down in particular. Again, I'm not sure what or how the government funding would impact the insurance proceeds in this situation, but you may be able, or there may be legislation in the future that help, take care of a portion of those losses. So I know that's looking forward and not answering your question, but that may be just one other route to put money back in your pocket.
Thank you very much, Mark. And for Linda, says, this is cute. Okay, so you have no crystal ball on automatic forgiveness. Thanks for what you do, very informative. Linda, yeah, we don't. So, anything we can discuss here really are things that are already in law. Yes, people have stated all kinds of things in the news, things that are attempting to go through Congress at present, but until it's in law, it's not a process that we can even tell you how things are going to work. That's all being negotiated and legislated. But please be assured that as soon as we have that information, our advisors will, have possession of that information to pass on to our clients. As well, we will be putting it on these Wednesday workshops as well.
Also, we do send out the blasts every week, so that if something like that were to come up just after a Wednesday, you could be sure we would be sending it out to let everybody know before waiting 2 weeks to let you know.
Thank you, Alan. It looks like Brian and Tim have some questions here that have been on here for a while. And Brian Z stating that they don't have a 941 or the CADE9C form, which was for the, believe for the PPP forgiveness. And in regards to that, Brian, I would check with your lender and find out exactly, let them know your situation, exactly what happened. There was a mishap with the number of employees being reported and what was the actual number. That way you guys can get that cleared up, because it'll have to be the lender and SBA working together. And once it goes to SBA, if they do happen to reject it or ask you for additional information or not forgive it, then you still have time to gather your documents to get that forgiven. So that's what I would suggest, is for you to get together with your lender. And sorry, we don't have more information in regards to that. But that is going to be your best bet, because each lender might be a little bit different. Unfortunately, they do have guidelines they have to go by, but they may have overlays as well. And then Tim, who's also with our team, is asking a question of Carrie. And unfortunately, Carrie's not here. And David, I'm not sure if you're going to be able to answer this, or Mike, if we can figure out a way to answer this question. It says here, are there any requirements for PPP borrowers to document the economic rationale for the loan? If so, where can a borrower find the specific guidance? Additionally, is the economic rational documentation requirement tied to the amount of borrowing? And for you to have received a PPP loan, there should have been economic damage to your business due to COVID. So that was one of the stipulations for PPP and for EIDL. So you would have to produce that information if required from your lender. This is another question to ask your lender. Are they going to require this documentation from you? Which application are you going to use for forgiveness? Is it the Simplify, the EZ, or the full application? Mike and David, do you have anything else to add to that one?
I think, Sunita, what you just mentioned, that sounds correct from what I've been hearing from within our office, exactly what you said.
Okay, perfect. Yeah, and unfortunately, I don't have anything that I can reference to you exactly here, Tim. I'd have to research it. I wish I could remember all of it. That's changed throughout these months, but yeah, I can't anymore, unfortunately. I have to refresh quite often to make sure that everything is up to date, and I'm not reading back to something that was 6 months ago that may have changed recently. But the new FAQ might go through that. I don't recall seeing it, but I may have just skipped over it. It is in the chat. It goes over some great information, but unfortunately that is the EIDL one. If I can find anything though, or if maybe David could find something too, I will send it over to you.
Okay, and this one is from Mark. It's a general question about our business insurance. We suffered a break-in and burglary at our grocery store. We were astonished to find that our insurance policy did not cover theft. How could that be? Is that common with business insurance?
Great, thank you. So again, this is a little bit outside. I deal more with homeowners insurance than the commercial. COVID has been an exception here. I am not as familiar with what type of policy is specifically written for grocery stores. If I was off the top of my head guessing whether or not burglary would be included, I would say I would think it would, but again, I don't have enough experience with that specific sector. Again, I would make sure, go back through the policy, make sure it's not actually there, request your full policy, make sure that whoever is dealing with your claim is working off of the same policy. But again, I apologize. I cannot answer generally whether or not it's common or uncommon for grocery stores to have that type of coverage. I'm sorry to hear that though.
Thank you for that. And I would also say, if you worked through a professional to obtain coverage, you might want to talk with them about your claim and the parameters that's going in under. And they might be able to help you as well.
And if I can, if I can just add one more thing in there. I don't know. I know that the time of year might play an impact, whether it was a burglary, whether it was happened as a result of a riot, and those might fall under different types of coverages. So whether or not there's a lack of coverage for the break-in, or whether or not there's an exclusion for the break-in, and what those circumstances might be, you might have a separate coverage specifically for riots that may have taken place. Your policy may be an all risk, which doesn't necessarily, it's a little bit of a misnomer, or it might be a named peril. So again, go through, take out your actual policy, and going through with an insurance professional might be beneficial to make sure that there's not something that's missed there.
And with that, it appears that we have answered all of the questions that were in queue, and we are now coming up at 11:30. So for session 71, we want to thank you so much for joining us today. And for, I know a number of you put your responses in the chat to Sunita's question. We will review those and take those under advisement. And we're always looking to, with your feedback, to deliver what is most helpful to all of you. So again, thank you so much for coming and participating. Mark and David, thank you so much for joining us and helping provide your knowledge and expertise as well. And we'll see you all on the 16th.
Thank you, everyone. Have a great day.
Thank
Take
you.
care.
Thanks.
Bye. Keep safe, everybody.